Hello, I'm Rhonda Porter, mortgage advisor from the Seattle area, and I'm here with your weekly mortgage rate update for the week of January 13th, 2025. Optimal Blue reports that as of last Friday, the 30-year fixed rate, which is the dark blue line on this graph, is just up 0.1% from last week's report, but that does put us at 7%. Now, this is an average of rates from lenders who use Optimal Blue for locking in rates. So it's about 35% of the market, and we don't know what is being used to price the rates. For example, is the client paying points? What are their credit scores like, and what the down payment is, because this is an average. So if you would like a rate based on your personal financial scenario, please reach out to me. I'm happy to provide that for you. So last Friday, we did have the jobs report, which came in hotter than expected. And we did have rates push into the low 7% range because of that. So this week, we have inflationary data that may impact rates, including the wholesale numbers on Tuesday with the producer price index, also known as the PPI. And on Wednesday, this report carries a little bit more weight with the consumer price index, which measures inflation for consumers. And the Fed does pay close attention to these reports, especially CPI. So we'll be watching those very closely because they are the two reports that will probably have the most impact potentially on mortgage rates this week. And check out that big red candlestick from Friday. I mean, that was pretty tough on rates, where the markets closed for the 30-year MBS down about 49 basis points. So it was a big impact. So right now, currently, mortgage rates are down about 10 basis points. And again, we're going to just be keeping a close eye on reports as we get the PPI and CPI out here later this week. I was recently asked to contribute to U.S. News about how to avoid private mortgage insurance, otherwise known as PMI. And it was kind of a funny ask because I don't think we should avoid it. I think we should review all possible options when you're looking at buying a home. So PMI is required on conventional loans when you have less than 20% equity or down payment. And some people do try to avoid PMI at all costs, thinking that they must have 20% down payment. But PMI does allow you to buy a home before you have that amount saved up. And this is especially a good advantage when we're in markets where home prices are appreciating, like we are in the greater Seattle, Western Washington area. For example, let's say you have $130,000 available for your down payment and closing costs, and you'd like your mortgage payment to be $5,000 or less. The first column shows that if you're avoiding private mortgage insurance, this would allow you to buy a home priced at about $585,000. If you're open to private mortgage insurance, then we'd be able to look at a home priced around $740,000. And obviously, there's going to be a big difference between those two homes and what you're trying to buy. The payment, of course, is higher with the higher priced home. You've got a higher loan amount, and we do have a little bit of PMI in that payment too, but that's actually a small portion of what's impacting that mortgage payment. Now, if you were to save up to have 20% down on a $740,000 home, that's going to cost you $35,000 more in the down payment. The last column is assuming 2 years from now, this person is still waiting to save up for 20% down payment. And now that same $740,000 home, based on estimated appreciation in the Renton area of around 4.5%, is now appreciated to $809,000, and the 20% down payment and closing cost will now cost about $50,000 more to buy the exact same home from 2 years ago. And that's assuming that that exact home is still available or one like it. So it just, to me, in my mind, it makes sense to go ahead and have PMI if you can afford to make that payment and if the scenario works for you. Everybody's scenario is different, but it is worth reviewing all options. If a opted to do what I have here in column 2 and use the private mortgage insurance, they have the advantage of buying at a lower price and gaining appreciation of almost $70,000 roughly in 2 years and paying down their mortgage instead of paying rent. So they have the amortization gain as well. And then they're also in a better position to hopefully refi should rates be lower as they're anticipated to be in 2 years. And then at that point in time, too, they will have 80% LTV or loan to value, which would eliminate the mortgage insurance with that refi. So assuming everything goes as forecasted. But you can see where it just pencils out, and everybody's scenario is different, and it is worth, checking out what all possible options are for you. So if you're thinking about buying, selling, refinancing, remodeling, or reverse mortgage, please reach out to me. I am so happy to help you or anyone that you know. And if you like this video, please subscribe or share. Take care. I hope to talk to you soon. Have a great day. Bye-bye.